Good afternoon. Welcome to the Meltdown. I hope you're having a great day and looking forward to a beautiful weekend. Now, of course, you got to be down here in the Texas area. Weather's gotten pretty nice. Folks, I'm watching the markets and I'm keeping a pretty good pulse on things. And, one of the things that alarmed me at 4:30 this morning, aside from the fact that I was awake, was listening to the fact that countries are being downgraded. Their debt is coming down. Well, of course, when your debt starts to lose value and the credit rating starts to drop, it's a pretty sure sign that you've got to raise some money and sell some assets off so that you can prop up the value of your currency because it's headed into the toilet. Now, Standard & Poor's, Moody's, and Fitch are not working in concert because when this happened about a year and a half ago, there were death threats, and people really had to run for the hills and be concerned. The Dow's up 100 points today. Yesterday, its conclusion was down about the same percentage as the precious metals were. And so the range for precious metals giving up room today is between 0.5% and 1.5%. These are aberrations. The consistency in the message hasn't changed. I'm not going to try and gloom and doom or scare anybody. That's not my style. But when you start reading reports that come from the IMF, and these analyses come from high-ups, those people that sit on the Federal Reserve Board, specifically Mr. Washer, Mr. Wilcox, and Reifschneider, those three people put out a memo basically that says that the economy is losing 7% of its value just to economic policy. That's $1 trillion. And that's $1 trillion on top of the $1 trillion of quantitative easing. And the debate amongst economists is that we're going to see an uptick in the economy, but everyone's trying to guess when the Fed is going to start tapering quantitative easing. Now, I got to tell you, lower interest rates are what keep trying to fuel the economy, and it's not working. And if you change, and all of a sudden you see a major change, you see the interest rate fluctuation in a period of 60 days, where we go from a 10-year Treasury security that's pushing 3% that drops to 2.6%, and the next time, we may go much higher. Look at the 30-year, look at the 10-year, look at what the economists are doing, look at what the big banks are doing, and leverage is everywhere. Problem with the economy is it's not healthy. Nowhere in the world is the economy healthy. And for me to be able to tell you that the top 1% of income earners in this country control 20% of the wealth is a scary figure. Now, I can tell you that I'm surfing and learning. And when you talk about the jobs that have done the best over the last 30 years, of course, we all look to doctors. We deal with that sector of the economy, which from 1983, the median wage was $26,104, now pushing $98,124 for a doctor, an increase of 276%. My point is that things may be getting better, but when you analyze and compare it over the inflation rate, that doesn't even take into account the value of the dollar. We're still growing over 130% since 1983. That's one of the strongest areas of the market. Now, we're supposed to see a reduction in interest rates. That's what we've been told will start to happen. But compared to last week, this week, the information that's being provided on CNN, fn.com indicates that the interest rates are going up, not down. And so it's the mixed messages. This is an area of the market where I am adamant about diversifying your portfolio, owning different types of material and different conditions and qualities, different types of material, coins, precious metals, own some currency, own different things so that you can substantiate that you're a collector, because that matters. Coin and currency grading has become quite impressive, and companies pop up all the time to authenticate and grade material. Scary thing is that if you don't like the grade at one company, you can go to the other and try it there, and if you're not happy with that, you can go to a third or a fourth, or you can go out 10 or 12 grading companies. I know of a company that grades coins, a specific coin about 8 or 9 years ago that was a specimen worth about $10,000 to $15,000, but a dealer got it in a certain company's holder and sold the coin for over $70,000. Now, it is not my place to, quote, be a white knight in the industry. However, it was certainly a coin that someone represented as something that I would never have transacted with a client, not at any level. And that's the real difference. We get sheets that collectors can look at for the retail values of coins, the wholesale value of coins, but you got to understand that the reporting documents that are utilized, they don't buy or sell the material. They're reporting on what other people have indicated they will pay under what circumstances. And so you've got to find the right person who's willing to disclose all the information so that you make a logical decision, not just based on some fact, but all the facts. And that's where 25 or 30 years of experience in the market pays off. It's not that I know what direction the markets are going to go. I don't have that information. My crystal ball was replaced in February. However, it doesn't work for predicting or prognosticating the market. What it does do is it makes it very clear that what the world banks have done, what quantitative easing does, what getting rid of your tangible asset collateral does, is it makes your position weaker, period. And so when I'm looking to do something, I find a great deal of success when I can say to a customer, an institution, a lender, whatever I'm dealing in, I've got X amount of collateral that I can pledge. That's what you do with your mortgage. You buy a home, they tell you that the house is worth 300 grand and they'll loan you 80% of that, and maybe you can get into the house as little as 5% of the value, so that if the real estate market dumps again, maybe the banks won't go under totally. This is high leverage. Arbitrage is the term that's utilized. And I want to thank Larry for sharing the word, because while it's something I've studied and been around for 30 plus years, sometimes you lose some of the definitions. I love what I do, and I love protecting assets. And while I can't tell you what gold or silver will do tonight, tomorrow, next week, I can tell you that things are inexpensive. And when I say inexpensive, I'm talking about in relation to where they should be. That discount in and of itself, where should the value of gold really be if we, quote, compared it to debt? You would think I'm crazy to tell you that an ounce of gold should be $60,000 an ounce, when in reality, it should be worth almost $600,000. But I'm not going to tell you that, because it's not believable. What is believable is that we should be in the $3,000 to $5,000 an ounce range. And when gold is trading for less than $1,300, maybe it'll drop down to $1,200. $1,180 is the recent bottom. That's below what it costs to pull it out of the ground. And folks, at that level, we popped immediately back up. And so silver down 20 cents, that's almost 1%. It doesn't matter. What matters is the value of the dollar in relation to other currencies. And so today it looks really strong and everything looks really weak overseas. But guess what? The ratio between gold and platinum has widened further. We're now at 11%. And we're still basically at 60 ounces of silver to an ounce of gold. And all that matters, all that means is that if you look at what's, quote, stockpiled by central bankers, The U.S. has nothing in the way of gold or silver, except what's, quote, being processed, and they're trying to sell it as fast as it's minted, versus foreign countries where they've got metal. The Soviets, the Russians, sold gold for the first time in over a year a couple of weeks ago. And are they still dumping? Do they need to prop up the ruble? Those are questions that I'm not going to answer here. But what I'm going to tell you is that the trend of traders, the guys that are in Chicago, the guys in New York, the guys in London, all over the world that are trading in accounts, are trying to convince you that you should buy into Twitter. That was yesterday's IPO. The latest one to ever open on the board, when they opened, I want to say it was around 10:30 Eastern. The pre-offering, guys, big institutions were able to buy at $26 a share. At one point yesterday, the shares were up over $80, 80%. And for the day, they closed down from where the, quote, market opened, because you couldn't buy it at $26 a share. You weren't in the pre-offering. So the profit of 80% in a matter of hours was real. And if you were able to buy enough of it, if you underwrote it, you're in. Now, we're going to take that and make that comparison into the rare coin market or into precious metals. When you look at the rare coin market, there are areas of the market that it doesn't matter how much money you've got, you can't buy enough of the coins. Now, I love Type 2 $20 gold pieces. They're the rarest of the 4 varieties that were minted, and they were produced from 1866 to 1876. The coins can be graded as low as good condition, which is not good. It's on the scale of 1 to 70. That's referred to as the Sheldon scale. 1 being the worst grade, 70 being perfect. There are no perfect older numismatic coins, although there are some 69 plus stars. That means they are so close, they should have called it a 70, but they came up with some cockamamie story about how it's not quite a 70, but it's pretty close. And that's okay, because those coins will command huge premiums. Modern coins minted, say, since the 1980s, you will find 70 grades because the U.S. Mint doesn't process the coins in the same form or fashion that they used to. In other words, when coins were dropped in bags, they had bag marks. And ultimately, the bag marks affected what you could see, how the coins were handled and banged up in the bag. Today, we do it differently. The coins are encapsulated as they're being minted so that they're really perfect coins. They should all be that way. And every once in a while, there's a piece of lint or something that gets on a coin and you get a grade of 67 or 68, and that's fine. The reality of what's going on literally dictates that you need to have material that is new and that's old, that you like. I love currency from the Republic and the government of Texas. And I've got 20 plus notes sitting next to me, ranging from the $1, the $3, the $5, the $10, the $20, the $50, the $100. The collection is probably worth in the neighborhood of, I don't know, $65,000 to $75,000. If someone wanted to come in, would I discount it? Probably. But it's rare material, and you don't get an opportunity to get your hands around it all the time. And so, for that reason, you should acquire it. And it's not a get-rich-quick scheme. Do not hear that. This is about, where is the economy going? Are we going to dip again? Are we going to see tapering? Those are questions that the guys with the most amount of money that they're managing don't have the answer to. They just don't. So when I look at the rare coin market, and I can buy some $200 coins in early copper, 1802 through maybe 1810 or 1812, and you can get your hands on 5 or 10 of them, and maybe they're 200 or 300 bucks a piece. That's old. It's rare. They were coins of commerce. The new coins, the Silver American Eagles, Proof and Business Strikes, the Spouse Gold that I love, whether it's in Business Strikes or in Proof. Those coins are perfect because they aren't being tendered. versus a coin that dates 1800 that has no copper value except for the intrinsic value of the coin. That coin's worth a couple $100 or a few $1,000s. I get some of those too, and I love the coins. But the reality of what you get and what you have and where you're going to go with it all relates to one simple matter. What will somebody else pay for it? And will you take it to an auction, or will there be somebody else lined out to buy it because somebody else wants to own that material? Now, I get other companies that listen in. I get clients that will listen in and call other companies and price shop. And, you know, everyone wants a good deal. There's no doubt about it. I'm as guilty of that as anybody. But, and it's a large question mark, is are you taking the advice to try and figure something else out that doesn't really play out and you end up making a mistake? Now, most people don't want to admit when they err. I'm pretty easy, I do. And ultimately, owning the right coins comes from dealing with somebody who understands the market trend and the market cycle. I mentioned the $2.50 Indian set in Mint State 62. Had very little profit attached to it, mostly because people don't promote Mint State 62 graded Indian gold. They like it in 63, 64, and 65. And yes, if you're one of those elitists and you can afford the 67 or the 68, buy it. It's rare and it's desirable. And the fact that more wealthy people will start looking again at this area of investment is critical. It's critical because when you look at an overall net worth value of a portfolio, when I was in college back in the 70s, it was 5% of your net worth goes into tangible assets. Today I hear stock commentators, Jim Cramer, I'm going to pick on you for a moment, 20% in gold. And why? And not GLD necessarily, but physical gold, something he can put in his hand, because it's rare. Now, this moment, you could call and you could spend on 100 ounces and drop 150, maybe 148,000, 45,000, whatever the number is based on what you want to do. But I can deliver those. I could probably sell 1,000 ounces, maybe even push 5,000 ounces. But there comes a point in time where dealers start talking to each other, and all of a sudden there's a perceived drying of the available supply, and that in and of itself will start to push the premium. Now, get enough of a push, see 100,000 ounces or a couple of tons disappear from the market, and all of a sudden you've created a fervor. There's panic in the streets. And all of a sudden, coins start to move because dealers are having a hard time covering other positions. It's not about owning the cheapest stuff. I reiterate it over and over, and people try to outguess me all the time. And, if it's good for you, then that's fine. But the reality is that when you're putting together a portfolio and you decide that that percentage that you want to be involved in is X, whatever X is, you get involved from a standpoint of ownership and determine that the term of time you're going to be in is somewhere between short and long term. The overall health of the portfolio. That's what you start to put into it. Now, I'm going to share a little bit because I was type 2 diabetic. I got myself in better health. My shape was out of kilter, so I worked on that. Still got a little way to go, but I can tell you a couple of facts about diabetes, because if Tom Hanks can talk about it, so can Brett Bogus. I can tell you that over $218 billion are spent regarding healthcare costs, that pre-diabetics account for 1 in every 14 people. The cost to be pre-diabetic runs over $25 billion, and if you are pre-diabetic, you increase your chances of a heart attack by 50%. That's exactly the same thing that's happening in the U.S. economy and all over the world. So what makes us think we're smart enough to fix the world's problems when we can't fix our own? The fact that you have net worth, that you've got dollars to spend, whether it's in gold or silver or rare coins, stocks or bonds or real estate, you've got an extra car, you've got jewelry, whatever you've put your money into, putting it into the right product matters. And so a third, a third, and a third is designed specifically to make sure that regardless of what the economy does, you're protecting assets. You're protecting yourself against the dollar fluctuation, currency fluctuations, the chaos that can break out in any part of the world at any moment. No, I don't think North Korea is going to fire nuclear weapons into the ocean. I don't believe that's going to happen. But the strongest hurricane, a typhoon, is just gotten done battering the Philippines, and it's headed for China. And the amount of destruction in the world's most historic storm ever, they can't record it from that high, but they can measure it. And well over 200-mile-an-hour winds. That's more than what hit Florida when Andrew hit. And I had friends who lived through Andrew. That's what I'm talking about when I talk about the state of, quote, economic health, or the lack of it. I want gold because gold is recognizable everywhere in the world. And I want U.S. gold. I don't mind some Mexican gold. I don't mind Chinese pandas or Canadian maple leafs. There's a different way of doing this. But if you want to protect yourself from the decisions that are going to be made by, quote, our politicians, then you need to own American. And you need to own a mix of older coins and newer coins. And older coins, if you want 1-ounce gold coins, buy circulated, lightly jewelry damaged $20 gold pieces. They're 0.9675 ounces. Yes, you're going to lose 3.25% in the weight to own a coin that makes sure that you sustain yourself and maintain your collectability. It is important. It's important because when Ronald Reagan decided to come up and pass with legislation and Congress all came together and they decided we're going to move funds and allow IRAs to be held in gold and silver, and platinum was added. They did it, my belief, is to get people out of all of their paper, because you can put all kinds of stocks and paper, quote, into your retirement plan, and you can put something tangible there. And knowing that of the 5,000 or 6,000 coin dealers out there, we're going to certainly tout our product, and we're going to find every loophole we can. That's what lobbying groups do to assist, quote, the industry. And you're going to get big companies on the coasts, whether you're talking about the Northeast or out on the West Coast. Guys are going to mark their product up. They're going to find guys to back them and do their advertising. And I'm not going to pick on any company in particular or any commentator. What I'm going to tell you is that these guys are compensated to do their advertising. It's pretty simple stuff. My idea, when I decided I wanted to try to do some TV and I couldn't afford the fee or the advertising when I came up with the idea, I wanted to go hire Mr. and Mrs. Cunningham, Tom Bosley and Marion, I'll think of Anderson, I think, but I'll look that one up. Anyway, Mr. and Mrs. Cunningham doing a black and white back in the day in the 50s during Happy Days when they could look at their coinage and they decided to put some of it back and then come full color. And here they are a bit older, 40 years, and pull the coins out and look and see the value of the change of their stored up collectible. And all of a sudden, you'd go from $20 gold to gold that was trading for anywhere from $1,000 to $1,500 an ounce. What an appreciation. And a Franklin half dollar that was made in the late 40s or the early 50s, a Franklin half dollar, nice uncirculated coin that they paid 50 cents for, a nice uncirculated one, if it was a better date, maybe it's worth hundreds or $1,000. Not a bad investment off of 50 cents. And so that's what my idea was. Didn't come to fruition because I couldn't pay them. But you know what? I understood the marketing of it. And folks, that's what's going to happen over the next 30 to 50 years. And so if you're in your 50s, like I am, and you're trying to think, what is life going to be like when I hit my 70s? My dad is approaching 84. He's in great health, probably the best health he's ever been in his life. 2 or 3 days a week he's out on the golf course. God love him. Folks, that's what I'm talking about. If you retired at 60 or 65 and you live to 85, how are you going to survive? You're going to stay in the stock market. And the stock market will treat you good because quantitative easing is going to send the Dow to 20,000 or 25,000. And more companies are going to go public and they're going to make more money. And oh my gosh, you're going to have tons of green. But you know what? It's all paper. And it's all tied to world currency. And world currency has no value. We've pledged ourselves far and above where we can stand. 20 to 1 or more. Those are called derivatives. And the banks are so over leveraged to the tune of somewhere in the range of 90 to 98%. You put money in the bank, they loan it out the door. They get interest on it, they don't pay you hardly anything. And go into your bank. A 6-month CD may be down as low as 0.15 or 0.25%. But put it out on a mortgage at 4%, they're the ones making the money, not you. You're paying taxes. Now, how ridiculous is that? That's what I'm talking about. Rare coins offer protection from taxes and appreciation, and you can horse trade. And if you find the right guy who has the experience, who's a student of the game, see, that's the difference. I've studied, I believe, I've been in it for a long time. Get somebody who's a rookie who is listening to the guy sitting around him and he's trying to pick up and make a good presentation, which I'm always going to condone, needs to understand the market. Now, there are people who get on a phone and say, Mr. and Mrs. Jones, do you have a $500,000? And you say, no, but I got a couple $100,000, and you move into what they recommend. That's okay. But you need somebody who understands the trend, who's been around for 25 or 30 years, maybe more. The difference is owning coins that other people want. Not just getting your, quote, wagon loaded until your axles break, because that's pretty simple, easy to do. I've watched other brokers do it, and watching brokers do it and maintaining the right area of margin matters a lot. It matters a lot. So for me, when I'm talking to my customers, I want to own things, A, that I promote, B, that I see other people promote. 3, I want you to own material that if you're somewhere outside of the immediate Houston market and you don't have the ability to come see me, you could go anywhere else in the world and sell this product. Certain coins you can sell over the counter. You can go to a pawn shop or you can go to another coin dealer. I don't have a problem with that. But you got to have a plan. Everyone should have a plan. It just takes, in most families, 2 people to follow the plan. And if you're not both on the same page, that's absolutely detrimental. It's like financial suicide. I know that one too. The bottom line is, you should have a pen and a piece of paper. You should sit at themeltdown.com, go through the over 500 shows, and listen to what we've provided. The message stays the same. If you've got questions, email me. Brett, B-R-E-T-T, at thegoldexchange.net. That's Brett with 2 T's, B-R-E-T-T, at thegoldexchange.net. You can call toll-free Monday through Friday, 877-705-2646. Hit option 0. If it's after hours, when you hit option 0, you'll go into a voicemail, leave a message, we'll return the call. Locally, 281-548-2646. Again, option 0 gets a live voice. Folks, this is the time to start answering some serious questions. And I've seen the insurance company that says maybe this is the time we do things a little different. Well, if you haven't done it yet, you probably should. And diversification is clear, concise, and logical. What it isn't, it's not your financial planner or your money manager or your stockbroker or bond salesman telling you, own a little of this stock and a little of that stock and some of these stocks and put some money in a money market and blah, 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 blah. It's about owning different types of assets that will be affected under different circumstances in the economy. That's clear, concise, and logical, which is a phrase that I've used for almost 20 years, and I love it because it makes sense to everybody. Now, I don't suspect, once you think about doing this, that you're going to wait a long time, and you shouldn't. You shouldn't wait a long time because, frankly, things change. And from that standpoint, I want you to be in material that other people want, but I want you to maintain liquidity. I was married to my second wife back in the early 90s. And at the time, I made sure she had a couple of 20 francs. Those are fifth of an ounce gold coins. The gold content, 0.1843 ounces. And that way, if there was an emergency in the middle of the night and I was out of town, or she just needed money, one of the kids needed it, whatever it was, she could go to a pawn shop and raise cash and go deal with whatever the situation was. Because when you get right down to it, credit cards will help you. There's no doubt about it, but people don't keep cash on them today like they certainly did 20 years ago. And so it's from that standpoint that sometimes you got to have it in green. Now, I've made the analogies to what's gone on in Egypt and what happened in Cyprus last year, and those economies destroyed. Absolutely turmoil. The Indian rupee, turmoil. And folks, you can move money around and you can make loans to countries and they will go upside down. Folks, this is a horrible time in the economy to be speculating with your life savings. That's why you do it. And utilizing your IRA may be a really healthy way to move funds around that are already committed. You just want to take them out of something and putting them in something else. They must be secured by a custodian who is approved by the, quote, government. The materials stored off-site, but it's all segregated unless you got 90% junk silver, which tends to be a couple of percentage points cheaper than owning silver rounds or silver dollars. But it's about different types of material and different types of qualities and maintaining that you are a collector. A collector was exempt from confiscation on May the 1st of 1933. That's the way Roosevelt confiscated gold. The next time around, the government's going to confiscate everything. That's my belief. And that's why IRAs are allowed to contain metal, but they must be stored off-site, because if it really came right down to it and the government had to do something, they could literally shut down the depository. Unfortunately, they're going to give you an IOU. You're going to pay taxes. A whole bunch of issues get thrown into this. And while I'm not a right-wing conspiracy theorist, I certainly listen to the right, and I believe in a lot of what they say. Bottom line, when I'm talking about owning a portfolio, you call the store, you say, Brett, this is what I got to work with. What do you think? And we put something together and we put the wheels in motion. It's important. It's really important. And even if you don't call, Saturdays, I'll probably start again right after Thanksgiving for the Christmas season. But if you would like to meet on a Saturday, all you got to do is call the store at 281-548-2646. 281-548-2646. Hit option 0. We're here Monday through Friday. Normally we shut a little early on Fridays, about 3:30, but you can ring the store anytime, leave a message. One of us will get to it. The phones start to blink. We know how to answer it and get your call and return it. Folks, it is an important time to get your financial health in order. Always get your personal health, your spouse, your family, everybody. Now, I never want to get off air without thanking Texas Children's Hospital, both the Downs Clinic and the Ronald McDonald House. If you visit themeltdown.com, click on the banner to the Downs Clinic. My son Jason is almost 3. He's got mild Downs, and if you click on the banner, you can make a donation, a tithe, or an offering. The information is totally anonymous. The funds go to Dr. Ostermeyer and her staff, located off of the Texas Children's campus now, not on Fannin any longer. The overwhelming success of the facility warranted a new location, but the information is kept anonymous for me. The Ronald McDonald House, very, very close to my heart. At Texas Children's on the 4th floor, there are over 20 rooms. They house the families of sick children that are in the hospital, so you can be up late at night and still wander the halls and go see your kids, or go back to a room and lay down for a few hours. I appreciate Nancy Allen and her staff. So if you can provide a hot meal from anywhere from, say, 30 to 50 people, or you would like to make an offering, please call 832-824-8600. That's 832-824-8600. I appreciate the doctors, nurses, staff, and of course the volunteers at Texas Children's throughout the medical center and all over the globe. Thank you for taking care of our kids. And folks, we're going to be off tomorrow. We'll be back on Monday about 2 o'clock. Michael, are we going to try and go at 9:30 in the morning? We're going to give it a shot. So we will be back. We'll post something after about a 30-minute presentation on Monday morning to let you know what happened overseas over the weekend, how the markets are opening, and then I'll come back and we'll start trying to do 2 30-minute shows a day. I appreciate you listening and have a great weekend. God bless you. We'll see you Monday.
Did you cut it?